discuss the state of play of the futures and options market, as also the long short side of the Lal Street. We are joined by Mr. Vaibhav Sanghavi, CEO at ASK Hedge Solutions. Namaste Vaibhav ji, a very warm welcome. We are meeting after a very long time. I trust all is well. How are you reading sentiment on Dalal Street at the moment?
Yeah, I think sentiment is clouded by, of course, few things, starting from what's happening from a geopolitical standpoint, from the Middle East standpoint, in terms of the supply chain problems. In addition to that, I think more importantly, from a capital flows perspective, at this point in time, as we see, many other regional opportunities are looking pretty attractive from a foreign investor standpoint as well. So all in all, I think market sentiments are pretty neutralish and are waiting to have some strong catalysts or triggers to kind of move the market on a secular basis.
Okay. Let's just first look at your positioning as of now. What is the long short that you have for the moment? How has it changed over the last 15 days?
So I think, Sahil, our long short kind of continues to be in the neutralish zone, not only now, but in fact for the last 2 to 3 months. And the primary reason is basically the current geopolitical uncertainty, from an overall macro standpoint. And which is why we have been a little cautious and kind of navigating this period, trying to have capital preservation or protection at the fore. So in some sense, while we like the medium to longer term story of India and few other sectors, but at this point in time, it's more of a risk management mode rather than anything else.
Are you fully invested in the sense that is there a cash positioning?
Yes, there would be, because we are a long short fund and we have that ability to be in cash or be neutral as well. We do use those kind of liberties to see to that our portfolio remains protected irrespective of the volatile market conditions.
Okay. What would be the percentage of cash versus total funds deployed?
No, I think from a cash, see, because you are doing a derivative positions, right, from a long short standpoint, I think cash is a little irrelevant number, in some sense. So I would rather say that we are from an overall longer term perspective in terms of our historical averages, we have been little lower than the longer term averages exposure, both on the gross side and as well as on the net side.
Okay. When you look at derivative positions, is there a sector specific short that you have taken off?
Yes, and I think our approach has at the core always been the fundamental equity long short approach. And when we talk about our fundamental equity long short approach, we use a combination of a top down and a bottom up approach, wherein we look at the global macros, the local macros, trying to understand which are the sectors which will do well and not do well as well. And this is how we kind of frame up our overall portfolio basket, both from a long side and the short side, to try and generate those kind of risk adjusted returns. So yes, it will be sectors, it will be stocks, depending upon how we are looking from a top down perspective or from a bottom up standpoint as well.
No. I understand the methodology. I'm just trying to check whether there are some sectors, given the very sharp bounce that we've seen in the markets, especially in mids and smalls, and many of them are represented in the derivative space. Are there some sectors that are showing signs of life on the long side?
Of course, Sahil, I think where we are looking at from overall sectors where we are positive on, and starting from the industrial space. Now, why industrial space and cap goods space? We are extremely bullish from a medium to long term perspective on the whole data center story. Now, when we talk about data center story, then all the picks and shovels, which is the companies which enable or which will help these data centers kind of get up and running, all of those companies are something which we generally like. So the whole ecosystem, including your electrical equipments, your power, your chillers, your across the board, whatever applications are used within that stack is something which we are extremely bullish from a medium to longer term perspective. So that's a space we do like. In addition to that, I think we are at a level where the valuations on the private banks are starting to look pretty attractive. I'm not saying that we are bullish right at this second, but we are waiting for some amount of ebbing of the FPI flows to have a very constructive view on the overall private banks, as a theme. So in addition to that, that's something which we kind of like, as well from a portfolio standpoint. So those are the few spaces where we are looking to invest, from medium to long term perspective.
Okay. How about IT? The index itself corrected about 33, 34% from its most recent high. Last week has seen a fairly sharp reversal. Is IT still a structural short for you?
See, I think IT is rather than structural short and avoid at this point in time, purely because on one side the valuations have started to look a little, attractive with the free cash flow yield kind of looking good. On the other side, I think whatever AI is doing in terms of potential revenue deflation, which we may probably see, I think there are two variables which are kind of very diverse, and at this point in time, I do think that the whole sector is under that transit. In terms of how the business model are going to shape up, 1 year down the line or 2 years down the line. So we would rather probably avoid at this point in time. Of course, if there is a massive rally, within the idle space for some reason, it would start becoming a negative opportunity for us as well.
Okay. I take it that your shorts are in place on software.
I would not specifically say that they are in place, but at this point in time, we are in avoid, I would say, the whole sector.
Okay, okay. So you are long electrical equipment as well as the broader manufacturing space. You have a good feeling about private banks. How about pharma?
Pharma for us has always been a bottom up sector, meaning because each and every company, to be very honest, are in a different phase of their approval cycle. Some are generic players, some have excessive exposure to Revlimid as a drug. Probably they will see some amount of pressure in the coming year. Some are domestic kind of focused, and the other newer opportunity, semaglutide, is something which many of the companies are betting on as well. So you have to ideally look from bottom up perspective, which are the companies which would be good at least for the next 2 to 4 years, as compared to those companies who has already ridden the wave of Revlimid and now will see some amount of degrowth kind of coming about. So that is how we will look at the sector.
Okay, fair point. So bottom up on pharma, slightly positive on private banking. You are waiting for some cues to emerge. Flat to neutral on IT. Top down macro and bottom up strength.
Yeah, I think PSU banks, and let's put some things in perspective, is for the last 1.5 to 2 years, the whole segment has been a great beneficiary of the underlying recoveries which have kind of happened. Which is why if you see the valuations which used to be close to about 0.5 price to book or 0.6 price to book has kind of moved up to close to about 1 times price to book. At the same time, the private banks, which were close to about 2.5 to 3 times price to book, has now come back to close to about 1.5 to 1.75 times price to book. Now, in my view or in our view, I think we are towards the fag end of what we have seen in terms of the recoveries from the NPAs. So for the PSU banks to incrementally maintain those kind of profitability level may be little challenging in the wake that probably we are seeing an interest rate hike kind of coming about, and that treasury books might also get impacted a bit. We will have to wait and see closely how they navigate, at least for the next 2 quarters, in the turbulence of what's happening to 10-year GSEC and the finer details of how the kind of NPA profile is shaping up with this kind of pressure from an overall industry perspective. So again, a wait and watch policy, especially on the PSU banks.
Okay. What you've not said but implied is that you're not bullish on them.
At this point in time, no, we purely because we would wait for either a very attractive level to get in from a valuation standpoint
Yes.
or some, I would say, some better cues, or we see some consistency or probably evidence of how they are navigating interest rate hikes and the NPAs.
Fair point. Structurally, Vaibhavji, when you look at the India energy basket on the listed space, especially PSUs, are there any dramatic structural changes that have happened in the way you look at ONGC, you look at Coal India, NTPC, maybe the PSU lenders on the power sector space? Are there any changes that have happened for the positive?
So when we look at energy sector as an overall basis, I think let's kind of segregate into upstream, downstream, and the power. And when we look at each of these segment, in our view, power has natural tailwinds. And when we talk about natural tailwinds, it is more to do with how the kind of climate changes are kind of happening in terms of extremities, and to the whole data center theme, which is going to increase the overall demand for the power sector as well. So, in our view, power is something, or power related ancillaries is something which we are pretty keen on. With respect to the oil and gas, if it's an upstream company, then we are deeply encouraged by the consistency of the policy from the government side on how the windfall tax is probably going to get treated as well. So I think upstream companies, while it is, they are at the vagaries of the underlying crude prices of what's happening globally, we do believe that that's a segment, at a good attractive levels can be looked at on a constructive basis. And lastly, from a downstream standpoint, we are indifferent at this point in time. And yes, you may see some amount of value, but there are too many moving parts at this point in time to take a very, strong view about that.
Okay, ठीक है. Vaibhavji, when you look at Adani Group as a whole, structurally there has been a shift towards an upswing, whether it's related to lesser problems that they face in the US or better business prospects. More or less, the entire, minus cement, the entire Adani Group is in an uptrend. What are you noticing?
Yeah, unfortunately, I think that's not something, those are the companies we generally very actively track, purely because our larger part of the universe is into the derivative space, and there are many companies within that group which are outside the derivative space in some sense. So that's something which generally we don't have much coverage on, internally. So I wouldn't be able to, comment on that.
Okay. Where do you find pain?
Sorry, where do I?
Where do I find pain in the FNO basket?
So pain, I think it is more from macro level pain, which may probably percolate inside the corporates at this point in time. While we meet the corporates, I don't see any immediate evidence or signs of pain, honestly, because last quarter has been, to be very honest, in as against the street expectations, have been pretty decent from an earnings standpoint. And as we do our channel checks, April and May also has been pretty decent across the corporate, kind of universe. The only pain point which I may probably see is the cost of raw material prices, which have been actually going up. So those companies which have been able to take the price hikes within this kind of raw material price increases, I think they are very comfortable. But those companies we have not been able to pass on the price hikes, I think will come under some amount of pain, at least from the next few quarter perspective. Assuming that it is temporary, I would probably, also say that if you get that kind of weakness because of a 1 quarter or a 2 quarter temporary phenomenon, then those levels would be pretty attractive to kind of actually go and buy from a longer term perspective.
Okay, metals has been a fabulous to be a place to make money on the long side. Is the rally now cooked?
Yeah, and from a metals perspective, I think while the immediate visibility from quarter on quarter perspective earnings, I think is pretty decent. And as you see, the LME prices, which are pretty buoyant as well, the only thing which is kind of refraining us from being very excessively bullish on the whole space is the underlying valuations. Now, when you look at the longer term price to book multiples of the metal companies, they are trading kind of rich. And my experience do say that the peak of the valuation is in the best of the cycles generally. So here is a case where we are trading at pretty high valuations. Whether it is the peak or not, time will only say. But it's a highly cyclical sector, so one has to be careful to take to take a longer term view. I think this is a sector you should keep on from a shorter term trading perspective rather than taking an excessively long call from a portfolio standpoint.
Vaibhavji, let's shift to global macro and two sets of questions. A comment on how do you see the rally in Seoul, Tokyo, and Taipei, as also Wall Street. Is it about to end, given that three major IPOs are in the offing in the next fortnight, and this is a bubble that's really expanded over the last 12 odd months?
No, I think this is a huge point of debate, and rightly so, because the amount of rally which we have seen in the whole underlying space, so-called AI space, I think is a fact, or it demonstrates the kind of optimism for the future of AI. Now, one thing is pretty sure that AI as a business in different forms is likely to kind of change a lot of the kind of underlying businesses. Um, if you ask me whether it is temporary or it has a very long legs to go, in my view, I think AI as a theme has very long legs, and it is for a pretty decent long-term perspective where we can see a lot of industries kind of changing because of AI. So I'm not in the camp that it is excessively into the bubble territory. Yes, in the initial part, as always the case with something which is coming about new, you will find people trying to attribute some valuations, and Macy's a little kind of expensive in the shorter term. But when we look about 10 years, 15 years, 20 years, I think this is a story where you will continue to find much more improvements coming about going forward.
Fair point. I think we are on a pivot as far as the world is concerned, whether it's economic, political, business, or industry, because of this AI. This was somewhat similar to the phase of 2003, 2005, when Google got listed, Facebook got listed, and the world actually moved to a 24-hour kind of a phase to be connected. Maybe AI is the next leap. Let's see how we figure it out over the next decade or so. A couple of points, Vaibhavji, given the changes that have happened in the Indian derivative space because of regulatory constraints, how has the return at ASK Hedge Solutions changed, whether it's improved or has it come down when you compare yourself with 2 years ago?
See, I think the returns are more of a fact of the underlying opportunity which is available from a market standpoint. Of course, transaction costs do matter a little bit, but in our view, the increase in STT, because the way our strategy is kind of structured, is extremely limited, probably to the tune of about, very guesstimate law is basically close to about 20 basis points in 1 year. So not much of an effect, but who would be largely affected is, I think, the so-called whole high frequency trading kind of basket or players where this effect can be pretty substantial. So yes, there has been an impact to some quarters, but especially we've been able to kind of mitigate it well.
Are you noticing that the market in FNO, especially the derivative side of options on the index, have now more or less monopolized by HFTs and algos?
It's not about monopolized. I think one has to understand that the efficiencies of the market, the better pricing of the markets is as a result of numerous participants kind of participating in the market, right? It makes the market more robust, in some sense. So it's not about one segment or the other segment or giving a preference to one or two. It's just that we need all the kind of participants in the market for the capital markets to grow and efficiencies to be created. And again, in line with the vision of the Honorable, Prime Minister of being a developed economy by 2047, markets efficiencies is at the core. If you are able to have markets which are extremely efficient and people can easily come in and go without much of an impact, then overall longer term capital flows tend to kind of get encouraged. So, not monopoly about one side of the whole segment. I think we need more and more broader participation across the participants.
Finally, is the best of rallies in gold and silver behind them?
The tough one, Sahil. I think gold and silver, in our view, also kind of rallied because of the underlying geopolitical problems. In my view, if the geopolitical situation kind of calms down and we enter into a trade deal or we have a visibility of trade deal between US India and US China, uh, a bigger part of the demand, which has come from the central banks, may probably kind of get reduced. Which means that if those events happen, then probably we may see an elongated period of sideways movement on these precious metals. So I would probably, wait for gold and silver, or wait for these events to happen to take a constructive, to take a
Okay.
very, sharp view.
Okay. Vaibhavji, my final question to you. You are a hedged player. It doesn't matter to you which side that market goes as long as it's volatile. You make money either way. But tell me, are you sleeping easier these days?
Oh, we have always been sleeping easier, Sahil. I think just because of the nature of the fund, what we are in, it doesn't matter for us which side of the market it to be very honest it goes. Having said that, we all, are strong Indians who want to see our market flourish over a longer period of time. So we would really like, of course, we do have a bias of markets going up always. But yeah, to be very honest, from an objectivity standpoint, it doesn't matter.
I asked this question to a lot of our friends on the long side of passive portfolios. Their answers are pretty telling.
Indeed.
But I specifically thought of asking this to you because I knew you were fully hedged.
Yeah.
As always, Vaibhavji, what a pleasure. Thank you for
Thank you very much.
thank you
Thanks.
for joining us and being providing such candid answers. Have a nice day.
Thank you. Thanks.
Okay, that, ladies and gentlemen, was Mr. Vaibhav Sanghavi, CEO of ASK Hedge Solutions. They are a HFT player in the market, and they make money on both sides of the equation. All they need is volatility. Thank you for watching. Please continue to be with on Business Today Television. Have a nice day.